You're listening to Why We Save, a podcast about the real reasons we do or don't save and the barriers people face along the way. I'm Isobel, and across this series, we'll be reframing how we think about saving and how we can make it work better for everyone. For so many people, saving feels like something they should do but never quite manage. What if it could happen automatically before you even notice the money's gone? That's the power of payroll savings, and it's something today's guest knows inside out. Today, joining Andrew and me is Domanski MBE, the CEO of one of the UK's largest credit unions. Caroline has seen firsthand how small, regular amounts taken straight from your wages can help people reach goals they never thought possible. In this episode, we'll find out how payroll saving is helping people build a financial safety net, even if they never thought they could save. We explore how payroll saving works, why opt-in can still be powerful, and hear some real-life stories of members who've transformed their finances and their lives with just a few pounds a month. So welcome, Caroline. Thanks for joining us on Why We Save. Do you mind just telling our listeners a little bit about what you do, where you come from?
So I'm the Chief Executive at No1 CopperPot Credit Union. I've actually worked at No1 for about 20 years, but 10 years as the Chief Executive.
And what is No1 CopperPot Credit Union? Can you
elaborate
explain
on
that, please?
So we are a credit union, which is a mutual organisation owned and controlled by its members. We were set up about 40 years ago by a group of police officers, and we were originally set up to help police officers with mortgage arrears, which at the time, if you were in the police force, you couldn't actually have any outstanding debt. So a group of officers pooled their savings, set up the credit union to help other members get themselves out of those mortgage arrears.
Fantastic. And is there anything, any distinguishing features because your members are, a lot of them are police officers, or are they pretty much the same as any other person on the street?
I would say in a lot of ways they're the same, but from our perspective, because we are run by our members, we have more of a view as to like what their life cycle will look like through their working life. So means we can have specific products that will help them on the journey, and we can understand the fact that how the pay grading works and how they might get promoted and right through to their retirement when we've got specific products for their retirement as well.
Makes a lot of sense.
Yeah.
So No1 CopperPot Credit Union is a credit union. It's in the title. What is a credit union, just for people that maybe haven't heard of it before? So
credit union is owned by its members, so mutual companies. We are primarily savings and loans institutes. So it's a pool of members' savings which they put together, which then are lent out to other members. The income that's made from the loans is then paid back to the savings as a dividend. So that's the general business model of a credit union. And there are almost 400 credit unions in the country with varying different fields of membership. So No1 CopperPot is a credit union specifically for the police force and their their families. But there are different types of credit unions. So there are some which are community-based, there's some which are different occupation-based, and they're literally all over the country.
And is it for the National Police Force, or is No1 CopperPot specifically for sort of around the Manchester area?
So we're national. We take members from the entire country, although we just run from one central branch. But some of the more community credit unions might be a specific area. So you might have, there's a credit union for Manchester, for example, and there's a credit union based in London as well, and they're regional credit unions.
And you mentioned mutuals. So for listeners that maybe don't understand what a mutual is compared to other types of organisations, could you go into that in a bit more detail?
Certainly can. As a lover of the mutual model. So the mutual model is around almost like self-ownership. So every member of those institutions is an owner. There's no external shareholders like you'd see with a bank or a different type of company. So that means that actually within the model, shareholders aren't obviously taking their cut of the income that's made. So all the money that's made in our credit union or in another mutual therefore goes back to the members in some way, shape or form.
And when you say members, do you mean customers?
Customers, yeah. We call them members. We don't call them customers because they're our member owners.
Yeah, no, it makes sense.
And that changes incentives and decision making, doesn't it? So in terms of you're not just looking to make returns for shareholders, but that affects the returns you give to your members, but also in credit unions and building societies, choices about keeping branches open, and which products and services you provide and to whom. And particularly for community credit unions, there's often a real social aspect to that, isn't there?
Yeah, because we're run by a board of directors. So on our board's made up from members. So it's a very member-centric approach in terms of what we do with the income, how that's distributed for members. But like you say, because we're mutuals and we're not paying shareholders, that does mean we can do different things. It does mean that we then have money to keep branches open in the building society case, or we do invest back in communities, and all of those things we do because we are mutual. But for us, it's really key on being like that member-centric decision making. Our board, who are our members, are sitting around the table giving their views on what they believe the credit union should be doing, what products we should be offering, and how we're dealing with certain decisions, that they get their voice on that.
Great.
So one thing that we're really keen to understand is about workplace savings or payroll savings. This is something that you've been doing for a lot of time at No1 CopperPot. Could you tell our listeners a little bit about what workplace savings is and how it works at No1 CopperPot?
Yeah, we've done workplace savings since our inception. So for a member, when they join the credit union, they will agree with us how much they want to save, and then we will actually deduct that from their salary. So the way that works with our payroll departments is they'll send us like a file once a month with all their employees' deductions in, which we then process into various accounts. But for the actual member, that's like a really simple way for them to save. Once they've signed up, their savings will just run every month unless they choose to change it, which they can do dead easy. They can move them up or down, and we can let them withdraw pretty much whenever they want. We have a mobile app, so it's super easy for our members to actually interact and work with us, but it's easy for them to save. They don't have to think about it. I guess like a lot of us, once the savings hits our bank account, once our pay hits our bank account, it gets spent. It gets swallowed up with life, doesn't it? But because we deduct it before it actually gets to people's bank accounts, it really helps them to save.
Yeah, there's a lot of research from behavioural economics and psychology around why it's so effective, because people don't miss it because they don't even see it because it goes straight before it gets into their pay packet or their wallet, and they don't feel the loss from having saved it as well. So it's a lot of evidence of why it's really effective and really works with the grain of way people think.
Yeah, it definitely does. I can't tell you how many people over the years have said to me that without being part of No1 CopperPot, they wouldn't have saved.
Yeah.
They it's just not a habit that they're in, but because they don't miss it, they've got it. I mean, we even have examples of where people forget that they're part of No1 CopperPot, and they might ring us up after 2 years and say, "Oh, what's this money coming out of my salary?" I'm like, "Oh, well, you've got £700 saved." They love it.
Yeah, and it's all instant access, isn't it? So they can get it whenever they need it,
Yeah.
which I'm sure we'll come on to later around kind of how you can access it and what people use the savings for.
Yeah, absolutely. And how do they... So when they join No1 CopperPot, they have to opt in to this scheme, right? I know from reading around, there are different types of workplace savings. There's opt-in and opt-out. What type is No1 CopperPot's, and how does it work?
So we run what we call an opt-in scheme. So in that scheme, the member agrees to join No1 CopperPot, and we would deal with all the paperwork from that side, and then we just write out to our payroll partners and let them know what deductions we want to collect. In the opt-out scheme, that's a little bit more like a pension where you would automatically be enrolled. It's more work from the payroll department side, which is why most of our partners are actually opt-in. There is quite a lot of research. There's probably a lot more success for people who opt out rather than opt in. But for us, we've been doing that for so long that we're well versed into running that scheme. And we have pretty good success as well. So we will try our best to get out to new potential members at like student officer intakes. So our sign-up rate would typically be over 50% at a student officer intake. And then we have varying different penetration rates within our forces. So where the credit union actually started in Manchester, Greater Manchester Police was the founding force. Over 50% of their officers actually save with the credit union.
Wow, okay.
And that's through the opt-in scheme.
Yeah, that's really surprising actually, because we hear about really low take-up rates for opt-in, and that's why, opt-out, as you said, can be a lot more successful. Why do you think you've had such high success with it?
And the key for us is getting in front of people when they start and being able to explain to them the benefits, the fact that, like you mentioned, it's instant access. So if they don't like it, they can take their money out, they can close their account easily. So it's a win-win for somebody to join. They've got nothing to lose. We don't charge them for it. And then once they're in the habit of saving, that's it. It becomes that habit, and they like it. They get used to saving. We've also, because we've been going for 40 years now, we've got a really good foothold in the forces. We get a lot of colleague recommendation. Mm-hmm. So a lot of the members that have been with us for a long time, they'll recommend us to their colleagues and say, oh, you should be part of No1. And that really helps.
Mm-hmm. It's almost part of a club, isn't it? And that's kind of what being a mutual is all about as well.
So what are the typical types of things that people save for when they join this scheme?
Savings are so varied. We actually, just in the last couple of months, we asked 500 of our members what they'd saved for. From those responses, we had 118 that had saved for holiday. We had about 45 that had saved for Christmas. We had 3 people that had saved to buy a dog, 3 people that had saved for tattoos, 11 weddings, 5 engagement rings, I believe, 2 divorces.
Oh.
We had a tractor in there. We had somebody who'd saved for a boat. We had somebody actually who'd saved and paid for a string quartet at his brother's wedding.
Wow.
Said it was his best day ever. And so completely varied.
Lucky brother.
I know. Completely varied savings.
Oh, wow, yeah.
Do you save for?
That's great that you get that human insight. I mean, that's why we're here. That's why we're doing. They want to actually hear what people are saving for, why they're saving.
Yeah. There's plenty of fun stuff that people save for, other than just, things like I'm saving for Christmas, or I'm saving for pay my debts off, or whatever you think.
Which are good reasons,
which
valid,
are excellent reasons.
But it's important to have saving for fun reasons and for spending, because that's what it's for.
Life's for living, isn't it?
Yeah, absolutely.
Save a little, you can have a lot of fun.
Yeah. But I think also what that shows is the savings are there to be used. They're there to see you through lumpy expenditure, all the big items in life, like the holidays and the tattoos. It's not that you could be saving, but it's there for you to see you through the bumps in life, basically. So then you're not pushed into problem debt instead, and it helps you to achieve things that you might not be able to achieve otherwise, like
Absolutely.
a tattoo.
Like a tattoo. It builds financial resilience, doesn't it? I mean, we all know that you should have some savings to fall back on.
Yeah.
Many of us don't probably have savings to fall back on, but if you start a savings habit, even if it's just £300, that you've got saved up, that is something to fall back on. Unexpected things happen. You go home, the fridge has decided to break, and you've got to get a new one. And we're all about building that financial resilience for people, in amongst saving for the big ticket items, like the motorhome, the boat, or whatever you want. It's just having something that you can fall back on.
Yeah, and our research that we've done with Bristol University shows that that pattern of saving regularly, even if it's small amounts, has a real positive impact on people's well-being. It helps them perform better at work, helps them sleep better, less anxiety. So it has positive well-being impacts, as well as enabling you to make those purchases.
Yeah, absolutely. I mean, we look at our members, their average savings balance is actually about £3,000. So it's quite a substantial amount. But there's also things to look at, like if you pay for ticket, like annual things up front, your car tax, your car insurance, if you can pay for those in one lump sum, you usually get them a little bit cheaper. So it's all part of building that resilience for people, and actually does save them a little bit of money.
Yeah, that's fascinating. That amount you say, that £3,000, research that we've just done with Bristol shows that just below that, £2,000 is a real core threshold for reducing the chance of people getting into problem debt and difficulty. So that's really interesting that you say that that's the average balance, because that's really coming out in our figures as a key threshold.
Yeah, definitely it is. And also I think for some people who might think that that's completely unattainable, are there any stories that come to light of people that maybe thought they weren't able to save and then were able to join this scheme and actually it's changed their life?
I have a lovely story from a member that I joined up at one of our conferences, who came running over to me saying, "Oh, do you remember me?" Of course, I said yes at that point. Perhaps didn't quite remember him. But he said, "Oh, do you remember me?"
We are recording this, you know. They might be listening.
Do you remember me? You encouraged me to join the credit union for £50 a month. He'd started saving. I said, "Oh, yeah, great." He said, "Well, I've just asked my girlfriend to marry me, and I used the savings to buy the engagement ring." And he said, "I just wouldn't have had that money otherwise without you actually signing me up." So I was quite touched by that.
Did she say yes?
She did say yes.
Phew!
Impressed by the money.
Yeah. So that's a really nice story, and there are lots of great stories like that you hear. We were just talking around this with my colleagues in the office, and we do have people who save and then they take the money out pretty much straight away. And we were discussing this, and one of our customer service colleagues had said to a member, "You know, you're saving £50 a month. Do you want to drop that down?" And he said, "No, I don't, because one day I'll leave the money in." Mm-hmm. Which just shows you actually that even if people are trying to save and taking the money out, you know, at least you're building that they want to save. Okay, then my life might not allow for that to happen right now.
Yeah.
But you're helping them get into that habit. And if they've taken the money out at the end of the month and they've saved it at the beginning of the month, they might have had to get that money from somewhere else.
Yeah,
they
that's
might have had to
completely
go to a
valid
payday
reason
lender.
for saving, and you're smoothing through the month.
Yeah.
Not necessarily through longer term, but that's completely a good reason to save.
It's a bit like the jam jar kind of where you put your money away for each week.
Yeah, absolutely. No, it's really valid. And yeah, as we said, savings are there to be spent ultimately, whether it's in the short term or the long term. It's what your different savings objectives are and how different savings products can help you achieve those.
Yeah, absolutely. And what would you say to somebody who perhaps thinks this would be a great idea but their employer doesn't offer it, or they don't know where to go to look for this sort of scheme?
You don't necessarily have to pay into a credit union through your employer. A lot of credit unions do take direct debit, so you could build up the same sort of savings pattern where you get your money transferred immediately after you get paid. But I think it's worth approaching your employer and asking if they would look at this as something as part of their wellbeing package, because actually, as you've mentioned, people who have savings, they feel better, they're more financially resilient, it's proven that there's less time off sick. So actually going and approaching your employer and saying, "I'd really like you to look for a partner to introduce this sort of scheme," can only be a good thing for you and your colleagues.
And there's all the research from Nest Insight in particular have done a lot of research, and we know the government is looking at this, and they've said it in their manifesto. Do you think the government could be doing more to help to promote workplace savings or make it easier to provide?
I think it could definitely be a smoother journey. Like the way we do our opt-in takes all the responsibility away from the employer to do the GDPR and the know your customer information. If the government was more encouraging or legislated that employees did have to provide payroll savings, it would help us make that a smoother process and get the employer actually involved in that, because they do actually have all the information that a saver provider needs already to set up the savings account.
And I guess you could see it almost feeding on itself, and as it grows and becomes more well known, more people will want to get on board with it, both providers and employees as well, and you can see it really growing.
Yeah, and you can't take away from the fact that a more financially resilient workforce, you know, there's less wellbeing issues. So it is a win for
Feeds through
employers.
to productivity and then growth, which we know the government cares about as its number one priority.
Absolutely.
Definitely sounds like a win-win. So we've got 2 questions that we ask every guest. One's a bit more fun and frivolous, and the other one's a bit more serious. Do you have any preference of which one you'd like to start with?
Let's go with the fun question first.
Fun question. So what is the first thing that you can remember saving for?
Gosh, the first thing is probably when I was young, my parents bought me a horse, and which was very generous of them.
Wow.
Although I did have to pay for a lot of it myself.
A real one.
A real one. A real one. A toy one. I had to have a paper round to pay for the hay and straw. But I probably would have been saving to buy things like the new saddle, the tack, all those things that you need to go along with having a horse.
And do you still ride?
Absolutely. Yeah, that is my passion.
Wow. And the more serious one, so if you could wave a magic wand, say if you had the power, you could change one thing to help people in the UK save more, what would it be?
I'd actually change the mindset of people to think about savings as being for them. I do think that there's a lot of people that think, oh, well, saving's not for me, or my budget doesn't allow me to save, I haven't got the money to save. And that's the mindset that needs changing, because everybody, no matter how small, even if you're only saving £5 a month, you can start to save.
That's a really good answer.
Yeah.
Who do you think, seeing as we don't have magic wands, could actually help to achieve that? Is that the government, the industry, or is it up to the individuals or some other group, or everyone all together?
I think as an industry we could help people save, actually, because a lot of times, we're trying to attract a certain type of saver by being quite rates driven.
Mm-hmm.
So by changing the mindset and starting to change our own narrative, actually, then we could actually make people believe that savings is for them. And like some of the stories that we've talked about average people saving not a lot of money and what a difference it's made to them, we should shout more about those stories and what we achieve.
Absolutely.
And could I put you on the spot? 'Cause you mentioned a certain type of saver and you talked about industry. So as a CEO of one of these organisations, what do you think the industry is doing wrong?
I think, well, like I said, I think we go for probably an older generation of saver quite often who's, in a different part of their life where they've got money to save. And forget about perhaps the younger people and what they need to save and how they might want to save, and how the fact that they want to do everything on their mobile phone, they want it to be easy. We need to really appeal to those people.
Great. Thank you so much. Don't know if you had anything else.
Great, thank you.
Thanks very much. Thanks for having me.
You're very
Great.
welcome.
Yeah. Thanks for joining us on Why We Save. If this episode has got you thinking, why not share it with someone else and carry on these conversations we all need to be having? And don't forget to like and subscribe wherever you get your podcasts. It will help other people find us and mean you never miss an episode.